also want to talk to you about some of the elements that are within your control with investing. Rebalancing, asset location, tax gain and loss harvesting, tax projections, and generating income. These are parts of your overall investment program that are completely within your control. If you don't maximize those, you're leaving money on the table and you're not optimizing your future financial outcomes. Let's talk about rebalancing. Think about a portfolio that started 50% stocks, 50% bonds, and then over time you're in a bull market, the stocks increase. Now it's 70% stocks, 30 bonds. You haven't done anything, but over time your portfolio has moved out of bonds. You've taken on more risk, but what now if the stocks suddenly fall? What if now you're in a bear market at a time when you have way more risk in your portfolio than you planned? So you need to have a method for keeping your portfolio in alignment. Think of it like a ship. Ship sets out on a journey. The captain along the way is going to need to correct course as the wind or the waves push them off course. Otherwise, they'll never wind up where they want to go. That's rebalancing. Asset location, what that is holding different kinds of investments in different types of accounts. Maybe you have a brokerage account, you have a Roth IRA, maybe you have a 401k or a pre-tax IRA. Right? There's different types of investments that make sense in different types of accounts. The higher return investments might go in the Roth, where you're never going to pay taxes on those gains. Maybe the lower return investments go in the IRA. And then in that brokerage account, tax gain and tax loss harvesting comes into play. As markets move up and down, you can take a look and see if it makes sense to harvest either a gain or a loss. That's one way you can minimize the taxes you're going to pay down the road in your investment portfolio. Of course, to do that properly, you need to be looking at what your future tax brackets will be, and that's part of the planning process, part of tax projections, but it's intricately linked with your investments because at the end of the day, your taxes and your investments move together, and that combination determines the quality of your retirement. Of course, at some point, you're going to need to live off this money. That's why you've saved. You've gone to work every day for decades, and every 2 weeks, you got a paycheck. Now you're retired, what do you do? That's one of the biggest challenges people face. How do you go from an employee where you're getting paid to somebody that has to live off the accumulated savings? Oh, and by the way, you can't mess up, you can't make a mistake, because if you do, you're going to run out of money at a time when you can't go back to work. Of course, the flip side is that you also don't want to underspend too drastically. You wind up saving too much money, not enjoying it. Life's short. You want to enjoy your retirement. So how much cash flow can your portfolio support? Again, that's a function of financial planning and cash flow planning, but how you actually generate that paycheck, that's where the investments marry the planning and come together to provide the tax-efficient income you need in order to retire. Of course, having pulled money out of your portfolios, you need to then rebalance the portfolio, adjust it accordingly to account for where the distributions came from. All this, putting it together, is really one of the keys to meeting your financial goals across the course of your retirement. Again, the key to investing is not to lose the forest for the trees. There's so much noise out there. You need to ignore the noise. You need to ignore the hype. And then you need to find a disciplined approach to building a portfolio where the holdings become greater than the sum of the parts, a portfolio that is going to help you meet your financial goals, get your required rate of return, while most importantly still allowing you to sleep at night.